Fellow traders, 'tis I, the Rumpled One, coming to you on Monday, November the 24th. The year's 2025. Let's talk trading, weekly, open, and gap. These videos are for educational purposes only. Your results may differ from mine. So we take a look at the dashboard, the weekly dashboard here, and all the gaps have filled. Right now, the pound is 13 pips below the weekly open. We've 35 off the high and 2 off the low. So we've got a really compressed range here. And we are in the lower wick zone of the previous week. Zoom out to the monthly. We're 42, almost 43 pips below the monthly open, 133 off the high and 73 off the low. We're putting in the opening range for the week. We actually got into the opening range for the month, but we fell through that opening range low at 131.085. And notice once again, we are still above the opening range for the year. And for the year, we are now 574 pips above the yearly open. We're 705 off the high and 985 off the low. We had an inside bar on Friday, and we broke above that inside bar by about 9 pips. It looks like we were at 31.096 and we hit a high of 31.182. And we've got about, about a handful of inside bar action on the daily. Same on the weekly, but on the monthly, just a couple of pairs. Some inside bar action. Okay, the big winner in range is the Swiss yen, 129 pips. Pound clocking in at 37. It's like, what is going on? And I see dollar yen has fallen below the 157. So that's one of those places I was looking to short. Might have to get my shorts on. Take a quick look at that chart. Let's see, don't want to go against that daily candle color. But that kind of looks like a return bar. That kind of looks like a return bar. This one looks like a return bar, return, and you got this huge gap. So I think price do that, but once again, this is daily. We'll just have to wait and see. Notice the pound is crisscrossing that weekly open. If you wait for the buy and short zone, you can see you might have got your fingers burned there. You could have made it up, made again, made it up again, and maybe you got your fingers burned but if you look across here, you wouldn't want to take any of these trades. It's like you can see price just keeps pushing above. Same thing happened here, even though it did break it once. So you had 1, 2, 3, 4 on the 5th time it broke it. And that's something I look for. It's like usually it'll break it on the 3rd or 4th, but when it keeps hammering like that, it's like, yes, sooner or later it's going to break. Might not break by much, so you can't get too happy. That's when I say don't read your own press releases. Range too low for rats. Once again, it's just crisscrossing that weekly open. Bambino Flex said to go short. Price near the pivot on the pivot trading plan said to go long. And so you can see here we did hit the pivot and went long. In fact, now you're 6.1 pips above it. So we've taken out that daily pivot. So monthly pivot we haven't taken out. Took out the weekly and we took out the daily. In and out of that upper wick zone. And the smart range, once again, 37 and 0 percentile. Okay. We've already broken the high. I'm sorry. Where am I looking? No, we didn't. We haven't broken the high. We haven't broken the low. So, but for the rats, 28 off the high, 9 off the low. But remember, range isn't large enough to trade. If it's not large enough on the daily, it's certainly not large enough on the weekly on the first trading day of the week. So high minus to open 22 for the crossover to the north, and open minus low 15 for the crossover to the south. So nothing to really write home about, but enough to buy you lunch or dinner. Okay, price action chart here. You see we had a return bar, and price came back to that open. That looks like a return bar, so you might want to shoot for 3105 too. So yeah, 3105 area. And it might hit it by the end of the day, it might not. Just have to wait and see. Lowest high, highest low trade here. You can see it triggered once, only for a pip or so. And the lower high here triggered, so a nice move to the upside. Notice we had a bunch of 3 balls at this area before. So if it can break all of them, then it might come back down. Okay, hitting that last 3 ball, just punched through. I don't know if you can see. If I scrunched the chart, yeah, you can see all those 3 balls, all but one. So just so for any new trader, this S3 is not the support 3 from the pivot calculation. This is off of the 3 balls here. So that's, but in other words, this was a bottom 3, so that's a support. A top 3 would be a resistance. I just want to, so this is S-3 as opposed to just S3. So you don't get confused on those. So just something else to note, you can see between here and here, there was an imbalance. Price came down almost to the halfway point between the 2 3 balls here, and then it bounced. Because these hashed lines, these are the fib retraces between the last 2 3 balls, or the most recent resistance 3 ball, most recent support 3 ball. So you can see here just in price action, it broke it, came back, but didn't get above this three ball here. It touched it, reversed, and you can see here, touched this one and reverse. Now we got a one ball, and if I was in a trade, I'd be out. Because I don't like seeing one balls always seem to take my money away. And since if I remember correctly, I messed up on Friday. I don't think I got to these charts. 44 ATR percent. So unless we make a big move, this might be the lowest for the year. Let's see, we had a 44 back in 2019, and we had a 50 in 2009. It's like every 10 years. So let's see if we can expand that range. And so 206. That was 217. So we'll have to see what price does. I know we haven't pushed out the range, the year-to-date accumulated range. And just take a quick look here at the trade reminder. So seller strong control on the monthly, lower high, lower low on the monthly, and we're below the monthly open. So far this week, price inside the lower wick zone of the previous week, price is turning down. Seller's strong control. And we crossed below that weekly open last. So in the daily, the previous bar was an inside bar. We mentioned that. Prices between the wick zones at the moment. We've got a higher high, higher low, but we've got a red candle. So that's a sucker bar, as I like to call it. And because on the state change, you can have a higher high, higher low, or you can have a lower high, lower low, or you can have an inside bar or an outside bar. Those are the four states. Now, also, because of the candle color, if you've got a higher high, higher low, but it's red, you probably might just want to wait because that's not a clear signal. And so I say they'll sucker you into the trade because you're thinking, hey, higher high, higher low, price should go up. Meanwhile, you're in a red candle, price is going down. And, for a lower high, lower low, but you have a green candle, you're thinking, oh, price is going down, but no, price is going up. So you can get suckered into the wrong way. So that's why you have to sit back, have a trading plan, because your trading plan should have all the analysis built in. So all you have to do is execute at certain levels, as opposed to keep having to think. Some of these things, after you have, thousands of hours of chart time, they just become almost second nature. But until then, you really need to have all these things written down and then execute according to plan, because it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.